Florida was down to two major insurers and a couple small ones. And even if they renew policies, they're not taking on new business. And so it's a real issue. What do we do? And unfortunately, there's not a lot that you can do. I accounted for taxes going up, but I never accounted for my
No,
insurance,
not that.
more than doubling. You just don't, we haven't seen that
No,
happen before.
no, you, yeah.
Unfortunately, this is a big issue that not enough people are talking about that could make people lose their properties if they're commercial, because now your cash on cash isn't there and you're not meeting your minimum debt coverage ratio.
Well, folks, we unfortunately need to talk about an elephant in the room if you are a property investor, and that is insurance. If you happen to be in the great state of California, you have seen several insurance brokers exit the market, such as State Farm, for example, and many others. We are hearing about insurance rates in the great state of Florida and Texas and others going through the roof. I've shared with my audience over the last 90 days or so that I had a fourplex policy get canceled. I will catch you up on that because I got a bunch of quotes and I made a selection. It is not pretty, but Anna has been doing this for a while, and she has oceanfront luxury Airbnbs in the great state of Florida. So I wonder what's been going on there. Anna, we got to talk about insurance because it is nuts out there.
We do. And it is unfortunate. We're watching the news today as Hurricane Idalia hits Florida. And, thankfully for me, it's east of where that is. But unfortunately, I know people that have had their homes wiped out in Fort Myers area last year when the hurricane came through Florida. And a few years before, there was a hurricane in Pensacola, really close to my two properties. I have one in Perdido Key, Florida, just west of Pensacola, almost to Alabama. It's on the Florida-Alabama line. And then I have one in Navarre, which is just west of Destin, up high in the Panhandle. And because of these storms that have hit Florida back to back over the last couple of years, as well as Texas and parts of, Georgia and Louisiana around that Gulf Coast, you have a lot of insurers who took billions of dollars in hits over the last couple of years, similar to California and wildfires. And so, unfortunately, what we've seen in Florida is that we've had 8 insurers go bankrupt in the last 2 years, completely wiped out. And because of the big, couple billion, I think it was $12 billion in losses, if I remember correctly, in Fort Myers, you had several other insurance companies, including State Farm that you mentioned, that said, we're now out. And so what's happened in Florida is it's not just that rates have gone up. It's that you don't really have many options to switch to once
Yeah.
your rates go up. You can't just call up and say, I need to find another insurer. Florida was down to 2 major insurers and a couple small ones that started leaving the business. And even if they renew policies, they're not taking on new business. And so it's a real issue, not only for myself, but a lot of investors and students of mine have called and said, what do we do? And unfortunately, there's not a lot that you can do, but the important thing is never giving up, never taking no for an answer on anything, and making sure that you leave no rock unturned. And so I want to give you an example, if we have time, of
Sure.
2 properties that I have in Florida, just to give you an idea of how big this insurance problem is, what the rates went to, and what our options were. Is that okay?
Please go for it.
Okay. So, a lot of times people think condos, your insurance is going to stay pretty cheap because it's all built into your condo association, the main policy, and you really just get a policy on your contents. Well, we have a condo building that's 32 units, and then it has a sister building down the street that's another 32 units. So within 64 units, our total insurance last year was $148,000 premium, split by 64 tenants. So it was built into my HOA fee, not that big of a deal. This year, that same insurance policy, Michael, $500,000.
Oh,
$500,000. So because it went up pretty much triple, we each had an assessment for 1 year of insurance that was almost $6,000 a unit, just to pay for an increase in insurance policy. So
that's $500 a month.
That was quite a shocker. So if that
Yeah,
continues, over the years, then that's a big hit on the income that brings a lot of these properties that were cash flowing as short-term rentals just because the insurance premium went up. You might no longer cash flow on this, property in these condo
for
buildings. And
sure.
this is happening everywhere. So our only hope is really that all owners, because of this, start raising their short-term rental rates or their long-term rental rates so that you have enough income coming in to cover the cash flow difference. Okay.
Mhm.
So that's the condo policy. The
Yep.
second property I have is a townhouse. It's an in-unit townhouse on 4 units, and it was built in the 1980s. So not only have insurers left the market, but multiple insurance like State Farm, they're staying, but they'll only write policies on properties that are less than 20 years old. So
Yeah,
if you don't have, a house that was built 2003 or newer, you're not going to get insurance. So Florida has something called Citizens Insurance, and it was basically an insurance company created with the help of Florida to take on those policies that were uninsurable elsewhere. So it's in
mm,
some ways subsidized with the state. I'm not sure exactly how they do it, but Citizens is like your insurer of last resort for hurricane
right.
risks of high winds and damages, from hurricanes. So I had a policy that when I bought the property, Michael, 2 years, next month will be exactly 2 years that I bought this property. My primary insurance policy was $7,800 and
Okay.
my flood policy was about $6,000. So I was about $14,000 a year to completely insure an oceanfront townhouse built in the
Okay.
80s. Last year, my policy went to 15,000
Mm.
from 7,800. So it
Oh,
doubled.
okay.
But yeah, but I got my flood insurance to go down to 4 by going with the national flood policy. So
Okay.
all in, I was at 19,000 for insurance. Guess what my insurance premium went to this year, Michael?
I don't want to guess. I don't know. I'm
$17,800 from $7,800 2 years ago. So a $10,000 a year increase
mm,
plus the $4,000 flood policy. So obviously, this is a big, big problem for people. If you are cash flowing $800 a month on a short-term rental that's oceanfront, and fully managed, you now have no cash flow.
yeah,
If you weren't cash flowing that much, and that's with 2021, short-term rental rates. So a lot of people
right.
bought thinking income's going to stay super high. They didn't account for obviously, insurance going up this high. I accounted for taxes going up, but I never accounted for my
No,
insurance,
not that.
more than doubling. You just don't, we haven't seen that
No,
happen before.
no.
So
You and I've had property for 20 years. Um,
never
I
seen
mean,
it.
never seen it. I mean, insurance.
Right.
It's usually the policy goes up, but it's under $100 usually.
Right, right.
Depending
And
on
I
the size,
usually
obviously,
factor
but
in about 3% per year.
yeah,
So when I'm doing my numbers, I factor in about 3% a year,
yeah,
just like inflation,
yeah,
with my premium going up. And then if my rent goes up 3%, it covers kind of everything else going up 3%.
yeah,
Well, part of the problem with insurance, if you don't own anything in Florida or California, don't tune us out,
yeah.
because the reality is part of it is because of where the property's located and these
Correct.
storm risks or fire risks. But the other part is because of inflation and supply and demand issues post COVID, replacement cost on homes has skyrocketed. And so
Exactly.
all insurance companies, no matter where you are in the United States, you're probably seeing at least a 30% increase in your premiums this year, just because replacement cost has gone up so much. And so we have this double whammy of values have gone up so much in Florida, in the Sun Belt, maybe certain parts of California, but also the replacement cost has. So you add that with storm risk. I can tell you, Michael, on apartment complexes, because I'm in the multifamily game as well, we're now having to budget $1,500 per unit in
Wow.
Florida on multifamily properties, 1,100 per unit in Texas and in the Houston area
So
for
let me ask you this.
properties.
If you were a syndicator and you were focused on Florida, like you thought Florida was the best market, and you bought 10,000 units in Florida, Class A stuff, but you didn't budget for a big uptick in insurance, I got to imagine that's going to just crush your cash flow. And if cap rates went up at the same time, big problems.
Absolutely. And this is one of the problems. I mean, it's a problem in all real estate right now, but especially commercial real estate, because you really have this convergence of
Yeah,
issues that
everything's going the
impact
wrong way.
value and cash flow all at the same time. Your taxes have gone up, your construction costs have gone up, your insurance costs have gone up, and rents are kind of stabilizing while cap rates are expanding. So, small multifamily cap rates have expanded 33 bips in a quarter. And we normally don't, think that you're going to expand 33 bips for 3 years. And so
Right.
it's definitely creating complications, for lack of a better word. It's really a minimal word. It's pretty
It's the pain is
destructive.
growing. Yeah, the pain
And
is
that doesn't matter how good of an operator you are. It doesn't, if you don't steal the property in terms of the basis at which you buy and have a big value add. So your point about the Class A, there's not really much value add. It's brand new. So, I typically look at Class A to B properties, or at least A to B areas, but kind of see older properties that have some bandwidth for increasing rents and bringing it up to today's standards. If you bought turnkey Class A, it's really going to hurt you, because you're not getting much cash flow on Class A buildings anyway. It's a low risk, low return model. If you're cash flowing 5% cash on cash and your insurance goes up 40 to 50%, just insurance
bye
alone
bye.
is going to crush your cash flow. So
Yeah.
unfortunately, this is a big issue that not enough people are talking about, that could make people lose their properties if they're commercial, because now your cash on cash isn't there and you're not meeting your minimum debt coverage ratio, regardless of what happens with rates and values at this point. So it's a real issue. Now, I do want to end on something kind of hopeful. So if you're in a residential property, let's just talk residential for a minute, and you're in Florida, you're in Texas, you're in Louisiana. Louisiana has just as big of a problem, almost as big as Florida does right now. But in Florida in particular, I called another broker. So I had two agents tell me there's nothing we can do. We can't get you with any other policy carrier because of the age of the property and because of them being oceanfront. Well, I found a broker who State Farm actually thankfully referred me to, and said he's with a lot of agents, a lot of insurance companies. It's really important that when you're shopping insurance, you're not calling an agent that's captive to one or two insurance companies. You need someone who's licensed and appointed with lots of different insurance carriers, so that they can actually quote you from
Agreed.
10 different companies instead of from one or two. So by calling another agent in Florida, and I'm happy if you reach out in the comments to me, I'm happy to put who I went through. We were able to get my hurricane only coverage with Citizens, Florida's insurer of last resort. And that policy was one policy. And then we moved the rest of the insurance, the liability with basically casualty, fire damage, et cetera, with a different insurance company, but exclude the wind and hurricane coverage from them. And we were able to get my total insurance down, Michael, to $5,200 from $17,800.
That's helpful.
Less than a third, less than what I ever had it for when I bought it 2 years ago. Now my flood is still $4,000, but I've gone from what would have ended up being a $23,000 a year premium this year, when I add the 17,800 plus the 4,000 and some change in flood insurance, to having three policies that total about $9,300. So it's a substantial savings and will allow me to cash flow even better than I did last year, just because of not giving up on what are all my options for insurance. So if you're not shopping insurance, folks, and you're just accepting your renewal and thinking this is just Florida, this is what we have, it's really important that you do it soon, sooner than later, especially because we now have another storm, unfortunately, that just hit Florida. And that's going to make even more insurers spooked and want to leave the market. So lock in a good insurance premium now and talk to your agent about using Citizens for your hurricane coverage and another carrier for everything else.
Love that advice. Just catching people up on what happened to my fourplex. So, folks, if you follow the playlist, The Hub, I have an office building in Fresno where I stock go givers and people that are helping. One of those folks is an insurance broker, licensed for lots of folks. They got out and created lots of quotes for me. And ultimately, I had a quote as high as 12 grand, 7 grand, and the lowest one was 5,200, all like for like with very minor tweaks. But that said, last year my policy was 4 grand. So I don't have quite the rosy story, but I did get something for 5,200. You do got to shop. You got to work with professionals. Don't get held captive by just one provider. And yeah, great advice. Anna, where can people find you?
Great. You can find me on your show. You can find me on social media at Anna Kelly, REI Mom. And for coaching and consulting regarding real estate and your financial future, you can contact me at reimom.com.
Awesome. Thank you so much.